Hey everyone, and welcome back to my channel at Cash Gains. In today's video we are going to talk about spotting trends both upwards and downwards. We are going to go over some terminology as well as going over some of the indicators we did in the last videos. If you haven't seen that video, my favorite indicators and how to use them, I suggest you watch that video before we go into this video. So with that, let's cue the intro. Alright, so first things first, we're going to go over the Heikin-Ashi candlesticks. For those who don't know, I am using TradingView. There's other platforms, charting platforms to use. There's Thinkorswim, and I know TD Ameritrade has their own platform as well that shows indicators and candlesticks and various other helpful things to spot trends. But I am using TradingView, and it is free. You do have to pay, I believe, $15 a month. You can make it $9 a month if you pay for the whole year, which came out for me like around $84, around that price range for the year. And you can use 5 indicators instead of the free version, which only allows for 3 indicators. But with that, let's get into the Heikin-Ashi candlesticks. So what are the Heikin-Ashi candlesticks? Heikin-Ashi means average bar in Japanese. The Heikin-Ashi technique can be used in conjunction with candlestick charts when trading securities to spot market trends and predict future prices. It's useful for making candlestick charts more readable and trends easier to analyze. So basically this just makes it easier to read. It kind of clears up the mess. So the first thing we're going to look at is Google. Right now it's on normal candlesticks, and you can see you can somewhat see the uptrends and downtrends and whatnot, but if we click on the Heikin-Ashi on the top left here, then it's much more clear where the trends are. The uptrends are more visible here, and then you get some consolidation and continuation of the uptrend here, and then the downtrend right there, and then we get some sideways action right here. The Heikin-Ashi candlesticks are pretty straightforward. So how do we know when to enter a trade though? It's good to see these trends here with Google and other stocks, but how do we know when to enter into a trade? Well, let's get into the SMA. The SMA is a simple moving average that calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. I use the SMA line to determine when to buy into a stock and/or cryptocurrency. Here we have a green candlestick that passes through the SMA line, which for me is a purple line that you see here. I then buy in based off other indicators as well, and with the Google stock we see a steady uptrend, and eventually we see the red candlestick pass through the purple SMA line, and that is when I sell. Later on we see another green candlestick pass through the SMA line, and then again a steady uptrend. And like the pattern before, we see a red candlestick pass through the purple SMA line, and then a small downtrend right here. Keep in mind that you want to use other indicators to determine when to buy into a security. Here on the MACD, we saw a buildup of momentum on the upside. We saw a gradual increase in the RSI, and on the stochastic, we saw a rising price action. Another important indicator that I use is the EMA lines, the 20, the 50, the 100, and the 200. For me, the red line is the 20, the yellow line is the 50, the 100 is the aqua line, and the 200 is the blue line. When the EMA lines are in this order, that means that the stock or security is in a steady uptrend. You can see here with Google that this area was a steady uptrend, with the EMA lines being in the correct upward order. So what happens when the EMA lines are in a downward order? When a green candlestick breaks through the SMA line, it is more likely to face more resistance when the EMA lines are in a downtrend. Here with Bitcoin, you can see the 200 EMA line, the blue line, is the dominant line, whereas the red line, the 20 EMA line, is on the bottom. The EMA lines also act as lines of resistance with regards to Bitcoin here in this example in this time range. The aqua line here, the 100-day EMA, acts as resistance for the Bitcoin price action. Eventually it does break through here, however then the 200 EMA line acts as resistance and eventually being rejected later on. Now this is not to say that if the EMA lines are in a downwards position that there won't be a meaningful breakout. Here, using Google as an example again, the EMA lines were in a downwards position, however it did break through and had quite a large price action increase. The EMA lines being in a downwards position just means that there is likely to be more resistance when the price action has an upwards trend. I also want to provide a word of caution. When the price action is moving sideways and is flat, this method of buying and selling does not work very well. If we look here at Tesla, between July 14th through the 17th, there is very little price action. It remained pretty flat, which using Fibonacci candlesticks and other indicators is pretty much useless in determining whether to buy or sell. You can see here the MACD momentum is pretty flat, the RSI is a straight line, and the stochastic price action is showing very little movement. So proceed with caution when a price action is flat. I'm coming out with another video on Wednesday. This video will be about COVID and the stock market. If you like this video, please check out my indicator video. This will be much more helpful to you along with this video in determining when to buy and sell a security. Thank you for watching and happy trading.